Hello, everybody, and welcome to Proc-N-Roll, your guide to practical procurement, where we make procurement rock and roll. With us today is Natasha, the pro CPO from IBM, McKesson, Salesforce, Nike, and now the founder and CEO of Candid Procurement, enabling transformation results for some of the world's top procurement teams. I'm Conrad, the innovator from Intel, eventually CPO at Adobe, and now the founder of one of the hottest procurement startups, Graphite, and Zach, our procurement expert for all things for procurement and our good friend from London. Together, we join you with almost 70 years of practical procurement experience. And here at Proc-N-Roll, we discuss the latest and greatest trends and topics in procurement. So let's jump into today's discussion. You may remember from last week's podcast, we talked about that 2 a.m. phone call from the CFO asking for savings. There's been some sort of crisis in the business, in the world, something like, a pandemic or tariffs, or we've lived through all of this, right? We've all had these experiences, and all of us in one way or another have received that phone call from the CFO. During that conversation, we talked about savings, like savings itself. There's a lot of history here, but the savings of value is really important. Natasha, you brought up just how important it is to build the right relationship with finance so that as you really build that savings and value program, it has confidence, it has credibility. Tell us, just kick us off here by helping us understand, let's do this. What happens if finance doesn't get involved in the cost savings process?
Then you have to find a way to get them involved. There's no ifs and buts, right? The reason, one of the most important, probably as important as to deliver savings, is to make sure that the organization believes what you've delivered. So credibility of the numbers is as important as the numbers themselves. And someone has to validate that procurement did deliver what they said. When I am tooting my own horn, people may listen to the message. But if someone's doing it for me, then people definitely paying attention. And I would say organizationally, I understand significance of it, because what's interesting is that as many years as savings had been measured and recorded, there is not one unified code for savings definition and savings methodology. So when procurement people move from one company to another, they bring their own prior practices and prior vision of how they measured and recorded and defined savings in their past organizations. But so do the CFOs. So they move from one organization to another, and what procurement presented to them in their prior company, the current procurement presents completely different vision, methodology, definitions, and criteria for savings. So I was thinking this morning, it's interesting. Will AI help us procurement professionals around the globe, all of us, to create the unified code for savings definition and methodology? Until that happens, finance engagement and helping procurement validate the numbers is very, very critical, because that gives credibility to the CFO.
I've always, from my earliest days in procurement, I always looked at savings reporting as a process of innovation and creativity, right? I would look at my peers creating a savings number that they were reporting out, and all you have to do is understand the formula, and you can figure out what to put in the formula to make yourself look better, right? And it was really, this bit about credibility is a very big deal, because I think it's been, even within our own teams, the credibility of the savings is in question. Zach, when you get pulled into consulting engagements, it's very often, I think, driven by the executive level, and the executives have a goal and they have a view. Natasha's kind of talking about savings that the definition of procurement savings that the CFO might have brought. But in addition to having procurement savings, I think the CFO and the executive team looks at like savings or, what they're asking us to do in a not completely, but largely different framework than how we look at value and savings in procurement. What's been your observation when you get into one of those projects? What is the executive asking you to deliver?
Yeah, you'd be surprised, actually, Conrad. You'd think that presenting savings numbers to an executive, and the executive then backs the program and thinks, yeah, let's go. This looks like a big, nice number for me. That means that, the savings are real and really well understood. I think the truth of it is oftentimes I'm underwhelmed and I don't get prodded enough on what these savings mean, how the numbers were built up, bottom up. And I think that's because there's an element of trust, right? Because we come in to do consulting. So part of what I do is I need to actually really make clear how the savings are defined in the output if we're doing a diagnostic or something like that. And most importantly, I think for me though, is translating the savings into finance language, right? Because I think Natasha's right. Procurement savings definitions vary from business to business. The financial accounting standards and principles and reporting, that doesn't change the world over, right? And we're talking about real money and real dollars here. So, being able to do that and translate that into a financial number is totally possible. It requires a little bit of knowledge from finance, but nothing too sinister. Nothing that an internal finance business partner who you win over and engages with you in the process won't be able to help you kind of put together, right? So, I think there needs to be scrutiny of procurement's numbers. I think, there should be more inquisitive mindset when procurement is presenting any kind of savings number.
Yeah.
So,
Conrad,
when I started with Adobe, go ahead, please.
So you brought interesting, I got stuck on one word that you said, creativity. And this is where creativity and savings, I am very cautious putting these two together. It always reminds me that who had very creative accounting system? Enron. We know how that ended, right? And I think
it's
that
the opposite of credibility, right? Creativity destroys the credibility, right?
Exactly. At the same time, there are some unique instances that will come your way when you're negotiating savings for various deals, because as market condition changes, as supplier composition changes, as the nature of the business, if you acquire a new entity, the nature of your purchases will slightly adjust. So you do need to be creative being procurement professional, maybe like more but creative within their realm of credibility.
Yeah, I think it requires creativity to figure out how to add value and save the money. But what I was seeing, and the reason I use that word is because it's probably more. Well, I don't think it's completely like detached from deal savings reporting. But if you have a team, I as a procurement person or leader have a stewardship of value. So here's your spend category. Every year you're managing $20 million of spend and you save $5 million. So you're saving 25% is kind of your average number. And I saw my peers sort of going, well, that spend isn't really part of IT. So I'm going to take that out of the numerator. I'm going to they're manipulating things, and I'm to make them look better or make their number look better in ways because they have I think a lot of times because of the lack of structure and clear data and clean data and a whole bunch of other things opens the door for confusion and problems and creativity that shouldn't be there. I just wanted to kind of open this up about the relationship with finance. When I got to Adobe, I came in kind of the early stages, but not the beginning of a commitment to the finance organization that we would save $100 million over the course of, I think, 3 years. And we executed and we delivered on that. My predecessor, Larry, freaking awesome guy. Like he pushed us. He delivered that savings and that value. When he left the organization, what I really started to get a sense from the business leaders and from the CFO is they didn't really trust and believe that number, like not at all. And I'm talking to the CFO in the transition, and frankly, when Larry left, I personally decided not to report savings to the CFO until the CFO asked for the savings. Like I was like, I'm not doing this anymore because it feels like everyone in the organization thinks we're chasing a goal that isn't their goal. And these numbers don't have the credibility, don't have business, value and impact that we think that they do. So I'm not going to report them. The CFO didn't ask me. I think it was 18 months. It might have been 2 years before the CFO actually asked me if I was going to tell him about savings, cost savings reportings, anymore. He just didn't even bring it up. And then when he brought it up, my answer to him, because he said, when are you going to report this to me again? And I'm like, well, I decided to wait until you actually ask for it. And what actually do you want to see here? Because, I feel like there's not a lot of trust in what we've been reporting. What do you want to see? What matters to you? And what became very clear to me from him in that conversation is he wanted me to show up in his office with a wheelbarrow of money every quarter of what we saved. Like, here's all the money we saved. You have it now and you get to go spend it. So the reason I was talking about the CFO and finance before is because this translation you both are talking about. Like, we talk about value, we talk about savings, and finance talks about, budgets, and they talk about bottom line, and they talk about all these numbers in different ways, which takes some of what we're talking about, value and savings, which isn't tangible currency, and they want to translate that into tangible currency, right? Because they want to reallocate budgets, they want to collect that money from a department, they want to do all these things. And this is where I think savings and value reporting starts to get very, very sticky. Not sticky like positive, like it won't go away, but sticky like a bunch of conflict and issues and problems. So I just want to cue this up. Big problems I see here. Number one is you take money away from the business, they don't want to talk to you anymore, right? So however you build out this thing and how you manage it, there are business stakeholders that we want to have collaboration and really good partnerships with. You report a number to finance that they don't know how to deal with, and then they don't trust and they don't call, there's just so many aspects to how this can go wrong. It's very important to think about it, thoughtfully up front and build a program that builds your credibility and builds the trust and builds the program and becomes a positive perpetual cycle instead of sort of a negative credibility cycle. So let's take the first one of those, which is engaging with the business. Like, how does business generally see this savings thing, and how do we get them to see it as an enabler instead of a procurement goal and a speed bump that they have to work through?
It's a really great question, Conrad. I think it depends on who you're speaking to in the business. You as procurement need to tailor your language. So, for example, if I'm speaking to finance, I need to be speaking in hard currency numbers and profit and loss terminology, in cash terminology. But if I'm working with a stakeholder to deliver a saving, you're right. If I go to a stakeholder and say, hey, I want to save some money here, I want to try to get 20% from this supplier that you really like to work with, they're gonna be very negative about that. They're not gonna accept that. So you have to go to them with a better story. So you're not delivering savings when you go to work with a stakeholder in business. You're delivering value, and it's about optimizing their overall relationship with the supplier, the agreement with the supplier, getting them the service that they want by being clear about specifications, by putting in the commercial stops, and that all adds value. And that is something that a lot of stakeholders get behind. They're like, yeah, you know what? I do want these kinds of things in my contract. I can see the value there. So you never talk about, I want to reduce your budget or anything like that. You're going in and you're saying, we want to work together to really optimize this and just be as efficient as possible and get you a better service and on the journey. And then when you go to finance, it's not about value and so, that stuff is important, but to finance, it's less important than hard numbers. So you're talking numbers there. So I think for me, it really depends on which direction, which conversation you're having. I don't know, have you had different experiences working with, say, head of business units versus the CFO office and how they see procurement? Do you notice big differences?
It is, this whole thing gets kind of complicated because it also brings back something we've talked about, which is whose goal is this that we're trying to address? Like, I have a goal because procurement, wants to put a trophy on the wall that we delivered $100 million in savings. or I'm here to help you achieve the business goals that you have. Like your success, what you're trying to do is most important. So it's definitely starts opening up what are we doing and why are we doing it, and how do we work and collaborate and communicate that with the stakeholder, right? So I love what you're saying in terms of the collaboration and having different language, but there still has to be a bridge in terms of how this all ties back together, right? Because I work on a contract, I may have direct savings, I may have indirect savings, I may have avoidance, and maybe some other definitions of of savings that have come up in the process. But those are I think the three main ones, and each of those have like a different impact to cash or impact to budget or anything like that, which it needs to be understood through this reporting process. But when you get to the business and the business has a budget, ultimately, by the way, I have seen organizations that take money away from the business. Like their CFO strategy for procurement work is actually, you go save money and we take that money and bring it back and reallocate it. Natasha, have you ever seen that like in action, or have you talked to peers that are doing it that way?
Yes. And that goes well in the organizations where the leadership instills the mindset of enterprise leadership versus functional leadership. It gets translated from the highest echelon on how functional leaders embrace the importance of the enterprise. And at the end of the day, whether the company is publicly or privately held, everyone in the organization should have some affinity and some affiliation with the enterprise success. And if people embrace that, then they understand that at some point, organization will invest in your business unit, and at some point, organization has to invest in the bottom line, because people in like the regular employees may not know that an enterprise is preparing to an acquisition. If you stay with the same company for a long time, you start identifying the cycles and you start identifying the reasons or predicting the reasons behind organization's economic behavior. When it's preparing to acquisition, for example, or when it's preparing to split the stock, or when it's preparing for something else, right? But you have to trust that that the CFO knows the strategy and manages cash flow and manages expenses based on that strategy. But also, it's, I think, a responsibility of all organizational leaders to make sure that people understand that there's time to invest into marketing, and there's time to invest in supply chain, and there's time to drop to the bottom line, because you need to elevate financial performance of the whole entity. So that's that's one aspect of it. Zach also brought up like the same notion, and I'm glad that it's coming up almost on every other episode, that procurement has to learn how to speak the language of the stakeholders and individual business units versus procurement language. Because marketing doesn't care about savings. What they care about is revenue generation. And how can procurement enable marketing campaign to be so effective and done in the right way that it will reflect on revenue generation? Tech is occupied and concerned and is responsible for all the systems being available and running on time and delivering great performance. And supply chain cares about availability of forklift drivers in their 3PL locations and of containers that will be delivering goods from one place to another. Neither of these organizations, if you save them 3 cents on the dollar, will praise you if they cannot deliver on their business. But if you save them 3 cents on the dollar and they can deliver the business that they're responsible for the organization, you'll become their best friend. So procurement always have to remember that procurement strategy and procurement approach is only effective if it enables business units to deliver what they are responsible to the enterprise to deliver.
Yeah. I mean, going back to Conrad's question around the budgets, and it's not something that procurement should feel the budget is really its responsibility. So if finance decides to cut a budget after procurement delivers a savings program, does that make us as procurement professionals feel worse? I mean, how do you guys feel about that? Because for me, I see that as a finance responsibility. Wonder how you see it.
Well,
when stakeholders will know what it's going to lead to, and they may start avoiding.
Yeah, I mean, when Natasha's talking, she talked about understanding the cycles and understanding how things work, I think is really important. And I think this is the crux behind a lot of what, like my big suggestive walk away from people for this episode is this collaboration and the alignment across the business about how this needs to work. Because let's look at what was happening with the wheelbarrow of cash back to the CFO, right? In the budget and planning process, imagine you're in the business, you're in marketing, and you want to do all of this stuff to support the revenue growth. And you come in here with a budget for the year and it's like, I need $100 million. And the CFO is like, sorry, you can't get $100 million. I'm going to give you $80 million. But you still need to support the business and do everything and achieve everything, but just go figure out how to do it with $80 million. Now, if you're going to tell me that you're also going to take away $20 additional million or $10 additional million away from me, then I'm going to, like, whatever that is, I'm going to start setting expectations about what I can actually do with the money that you're giving me, right? Like, okay, this is what I'm going to go do. And if you're going to take more money, however that works, but I'm starting out with an understanding of the rules of the game, right? Now, if you're essentially taking the $20 million of savings out before I even get started, and the CFO's like, look, Natasha, you're responsible for marketing. You go work with Zach. Like, Zach's responsible to help you do it with $80 million. You go work that out. And then at the end of the day, Zach figures out how to save you $20 million. And in this process now, the CFO wants another $20 million out of, the savings. You have this big disconnect because that $20 million was already spent by the CFO in allocating it to another department. It's like Natasha, some other priority in the business.
You know how that's solved, Conrad? Procurement look at the budget and get involved in the budgeting process. Because then procurement can tell you where savings are not to be made. Yeah.
But unfortunately, it almost never happens.
Never.
I think this is one of the greatest pain points and kind of like heartaches for procurement professionals, that they're rarely granted a seat at the budget table.
Well, what I've seen is actually, procurement is involved often in FP, like in FP&A, procurement's always a consideration, but they'll go to procurement and they'll say, can you give us a forecast of, this contract and that contract and how you feel the numbers are going to move? So it's sort of, they are baking in procurement costs and they're asking procurement for input, but procurement are involved in the overall strategy and the overall kind of objective. Right. Whereas if procurement were involved in the strategizing and the objective side of it, procurement can probably come up with much more creative solutions, can adapt much more quickly to business changes. I think it comes back a little bit to getting a seat at the top table, right? And being able to speak the language, and for executives to take procurement seriously. I think there is a lot of value procurement can deliver. Like I said, FP&A already forecasts those costs. So
we've used this word a lot, like seat at the table, right? And I think over the last couple of years, I've heard people say, well, procurement has already got a seat at the table. There's multiple tables, right? And as you kind of look up this value chain of where you can be engaged and collaborating, I think this planning and design and innovation is like the very, very top of this like value pyramid that you can climb to. You're not going to get that level of, participation before you can sort of crawl and walk and get ready to run from a procurement transformation perspective. But that absolutely should be kind of the North Star vision, to have that level of participation, engagement, and understanding in the business. What I'm really saying is the disconnect that can happen in the budget and finance and reporting process is a huge problem for credibility, because what the CFO expects and what you're delivering and reporting can really be misaligned. And us, in procurement, a lot of times, particularly in a world where inflation is going up, we're not actually dropping prices in a way that you can do a formulaic calculation and say we're actually saving you money. Maybe we're this avoidance of an increase or holding down an increase to half of what was proposed isn't going to translate it back to hard currency in a way that the finance is going to want to see it. But it's incredibly valuable to the organization still. It's just figuring out how to bridge how we talk about things and how finance talks about things and get that alignment back with the CFO, right? And the CFO's organization and how they're going to help us. We're running short on time. I want to maybe spend 2 minutes, Natasha, with the mechanics of actually having finance help validate what we're saying so that, after we have the kind of a process straight with the CFO, how do you get FP&A to help you validate the savings? I think you've given examples in the past of them helping in the process.
Yes. And it's when it works well, the results are amazing. So basically, the role of finance, and I am purposefully and consciously using the word validation. It's not approval. Procurement is the one that approves the numbers. Finance validates that based on previously agreed upon savings definition and methodology, procurement delivered these savings. And finance, being the organization that agreed and approved that definition methodology, is looking at the numbers and how they've been calculated. And they validate that, yes, indeed, this amount had contractually been delivered. And yes, indeed, this is cost reduction, or this is cost avoidance, or this is cash. And brings that number to FP&A planning for either the next quarter or the next year, and for any planning purposes. And then whatever reporting structure organization has when the financial performance is reviewed, it is finance standing next to the CPO presenting procurement's numbers.
Now that helps. That helps like clean out the creativity I was talking about before, right? The potential creativity goes away. We have credibility. While you were talking, it reminded me. I remember I talked about sitting down with the CFO. It took about, I think it was another 18 months going back and forth with the CFO to really get something that both of us were comfortable with. We added new metrics in here to the sort of direct, indirect, and avoidance. We added another line in there, which was impact to budget. So that we could say, okay, these things happened. What was the impact? Is it budget negative or budget positive? Because, budget's still going to have to be increased, or maybe there's money there that can be reallocated within the organization or across the organizations that really helped quite a bit. Zach, I would love for you. Go ahead, Natasha, you, and then I'm going to pass it back to you, Zach, for last word and wrap up here as we're getting close to the top of the hour.
So I when it comes to budget, it's tricky. I think it depends on the CFO's, appetite to acknowledge that budgets are formulated from a very educated perspective. Sometimes budgets are a wild guess. And if procurement claims savings against budget, it frequently generates some kind of like uneasy feelings with the CFOs that, if numbers were inflated in the first place and you came below numbers, then it doesn't tell me that you really saved money. So I think that with budgets, you have to be careful. But also, and sorry, I'll pass it on to Zach in a second, but because we promised to have a conversation about cost avoidance and why it's being treated by most of the CFOs as a stepchild. But nevertheless, it's important for procurement to generate it. And I think procurement has to have very thorough and educated conversation with finance, explaining that procurement doesn't pursue the areas of spend today that may generate only cost avoidance, then tomorrow, the next year, the next payment cycle, not going after this cost avoidance would erode margins of the future. Because if you don't reduce the cost today, then you're going to end up paying more tomorrow. And yes, you can renegotiate at a year or 2 years after, and then it will be cost reduction. But it's better to avoid paying higher rate today than generate reductions 2 years from now and paying higher price during those 2 years. So I think that it is procurement responsibility to partner with finance and bringing some love to the avoidance.
Yeah. What would be really useful is to go through like an FP&A process and then just for procurement practitioners to see kind of what FP&A does, because FP&A sets the budget at the beginning, right? And then procurement are delivering on these initiatives, but FP&A has sort of set the budget on the basis of like last year's baseline. Okay. Then they're tracking how they're doing against that budget throughout the year. And your job as procurement, if you want to build a great relationship with finance, is to give them that data that they need to build up that forecast accurately, right? And usually the really good FP&A teams will have lines inside their plan, in their budget, and in their forecast and reforecast for each of the large contracts that you're managing. Especially, they'll have it broken down by month, so every month how much you're spending. So if procurement can get to that level, then I think that starts as a good way to start bridging this divide between budget and saving. Leave the budgeting to finance, right? In that case, and your job is just to reduce the contract value, and then what finance is forecasting is really up to finance, because they might bake things in like inflation, which Natasha, you're saying is cost avoidance, right, on the procurement side. But if finance have baked that into the budget, like let's say they apply a 5% inflation assumption, then you go away and negotiate that away, then yeah, you've clearly delivered value. So I think there needs to be a bit more connectivity between both functions. But yeah, look, I think we covered a huge amount. I'm going to do a wrap up now because I think we are definitely top of the hour. But so what we said, procurement must involve finance in a savings program. You don't really have a choice. So if you're not involving finance, you must make sure that finance are scrutinizing your numbers as procurement, that you have clear definitions, and that the business enterprise understands the terminology that you're using. And we talked a little bit about those definitions today. Watch out for your credibility, right? So if you're claiming savings, and they're not real and it's funny money, you're going to get caught and you're going to trash your reputation, and it's going to take a long time for you to turn that ship around, especially. So please watch out for your credibility when you're communicating savings. Speak the business language, we said as well. So make sure that when you're talking to finance, it's about financial numbers they understand. When you're talking to the business, it's about value and how you're going to improve the service and the relationship that they're getting. And yeah, I think we talked about the importance of defining the savings and getting ahead of conversations like cost avoidance, etc. So I thought overall a good discussion.
Yeah, fantastic. Really good. Really great to be with both of you. And hope everybody gets some value here. This is very practical. This is the nuts and bolts of procurement that really it's our billboard and our value, right? So, all right, everybody, thank you very much. Stay tuned. We're coming back to you again soon with another great episode. Don't forget to like and subscribe and share, and we'll continue to bring you great practical procurement tips.
Rock and roll.
Rock and roll.